So today I want to have an impartial discussion about property investing. Is it still worth it or not? No fluff, no nonsense, because quite honestly, I'm seeing a lot of panicking landlords out there, a lot of people off-put by property investing, and I just don't understand why. So my plan is to take you through the cold hard data that underlines the positives and negatives, the opportunities and traps in property investing at the moment, and ultimately into the future. Because right now we've been going through so much change with the new Labour government, the new budget, the new Renters' Rights Bill, President Trump returning to the White House. And whether you like or don't like those things, it ultimately all creates so much interference and change to life as usual that it can then be difficult to know what to do. And to reassure you, if you're right now nervous about your property portfolio or nervous about buying or investing in property right now, I don't think you're mad to be. Purely because there is just so much negativity in the press about property at the moment. So I'm hoping me talking it through with you logically right now will help you make the right decision with property moving forward, whether you should invest or not, or downsize, or whatever the case may be. And in case you don't know me, I'm Will Gale, and the reason I feel showing my insight to this is helpful is I have a unique insight to the property market, as since 2012 I've built a UK-wide home buying company, British Home Buyers, a nationwide estate agency, British Home Sellers, as well as my own property and equities portfolios. So literally my businesses deal with thousands of properties a year spread all over the country. So really it is my life's work to understand the UK property market, and trust me, I do notice a lot of traps that good people have fallen into with property, and also the huge opportunity that clearly will always exist in property for some time. So let's start with what are the risks right now. So rather than just worrying the government hates landlords, let's break it down to tangible, objective risks. These risks, in my view, are 1, interest rates not falling as quickly as expected or even rising. 2, Labour government making it harder for landlords to operate. 3, house prices falling or not rising as quickly as expected. Now, if you think I've missed anything with that, share your comments below, but ultimately, simplistically, it comes down to the cost of money, intervention from governments, and how those things affect house prices. But let's also be fair and also look at the opportunity in property right now. 1, uncertainty is slowing price growth, making it cheaper to buy than it ordinarily would be. 2, landlords exiting the market, pushing up rental prices. And 3, house prices rising and rental profits rising as interest rates drop. And I want to underline a massive opportunity in the property market right now that I feel bizarrely gets missed in all this noise, although it's so obvious. There is a massive shortage of property in the UK. Ordinarily, in any market where there is a massive shortage of something, that indicates a massive growth market people scramble to get involved in. Just think about basic supply and demand economics. If you've not already watched it, my last video literally breaks down how over the last 45 years, we've dropped our home building volume by about 100,000 homes a year from where it was back then pre-80s. So by now that's accumulated to us having built 4.5 million less homes than we would have if we continued that trend. And guess what? Right now we are 4.3 million homes short in the UK, which is why in reality we're in this mess with house prices completely out of control. So the problem with the market is nothing but a supply and demand issue. And if you disagree, I suggest you watch the video I'll link up here before you attack me with comments. So look, if so far you agree with me that right now as a nation, we're short of this red hot product called property by the tune of 4.3 million homes, then how realistic do you think it is that any government gets on top of that shortage anytime soon. When you also factor in the massive population growth we've been experiencing, almost entirely through immigration. Now, Labour is hoping to build 1.5 million new homes this Parliament, but how realistic do you think that target is? How on earth is that ever going to happen when right now we are short of construction workers by the tune of something like 266,000? That over the last 5 years, 300,000 construction workers have left the industry. And a big part of it is, as you can see from this graph, it's because older generations of builders are retiring, and that's not being backfilled by younger generations coming through. Don't believe me, this is a problem. Test this out for yourself. Pick up the phone, try and book a decorator, an electrician, a plumber, and see when they're next available, and importantly, how much it's going to cost you. There is just such a shortage. So look, if the market was left as a free market without any interference from government, then quite clearly the supply problem is something that is going to take at least a decade plus to fix. And in reality, property prices are clearly going to keep rising unchecked. But let's unpack the risks in property right now, because it's not a free market in reality. It's tinkered with, which I'll explain how later. But in my view, the main risk to the property market right now is a liquidity risk. The way to think about it is right now, the real reason house prices are so high is because there hasn't been enough supply being built for decades. That's pushed prices up. That's then made it a more investable asset. So people pile in to invest because prices are going up so quickly. That then pushes prices up further. And so the cycle continues. The true solution is to fix supply, and then everything else corrects over time beneath it. So supply increases, price growth slows, property becomes less investable because it's not appreciating as much, it's not as attractive an investment. That slows growth even further. And then you get equilibrium in the market again. You think I'm mad to say that? We actually had that equilibrium at one stage. Back in the pre-80s, you can see here how home ownership in the yellow was increasing, social housing in the blue was increasing, and organically the private rented sector was shrinking. Even though there was no extra stamp duty was only about 2% back then for everyone else, way lower overall than it is now. And if you look at our house building, we were building huge volumes over that time. The volumes that were being built then are the volumes that we're targeting right now by government. Bear in mind, back then we had a population that was 25% smaller than it is now. And hey presto, house price growth on the left side of the graph was slow back then, as you can see. It only started to boom when government interfered and collapsed the volume of new homes being built. So look, in reality, prices aren't going to drop because of supply dramatically increasing. So in reality, there are only two core things that can change the speed at which property prices rise. Which is why I say, that's why I said earlier, the true risk is a liquidity risk to the market. The first risk to investing in property right now is government interference. And the only way they can interfere is to interfere with liquidity. And they can do that by tinkering with stamp duty, tinkering with taxation, and tinkering with regulation. So sadly, that is the world we live in now. Governments, both Labour and Conservatives, mismanaged the property market and the supply of property being built for 50 years. And rather than be honest about that and focus on creating an economy focused on incentivizing property investment, property entrepreneurship, making the building trade an attractive trade again, removing regulations and red tape, they're instead having to tinker with stamp duty, tax and regulation to dampen demand from property investors, but also remember, dampening demand from all buyers out there. Bear in mind, stamp duty is going back up for everyone next year when the 0% stamp duty threshold drops from £250,000 to £125,000 from April the 1st. And the second risk to property investing right now is, of course, interest rates not falling or not falling as quickly as expected, or I guess if they went up. Right now, the market believes there are two key risks to interest rates, and it's these two people, the Chancellor, Rachel Reeves, and President Donald Trump. Now, I actually really like one of these people. Try and guess which in the comments below. But despite my personal views, the markets are nervous about both these people, which is why gilt yields are at the highest levels all year. Now, gilts, in case you don't know, is simplistically government debt. So if yields go up for gilts, that increases government's costs. When gilt rates increase, that causes swap rates to increase. Now, swap rates, in short, is the market predicting interest rates into the future and essentially creating a market around it. It's swap rates lenders use to back the risk of their fixed rate mortgages that they then offer you and me on the high street. So you might be sat there thinking interest rates have gone down, but yet mortgage rates have gone up. In short, it's because the market believes interest rates will stay higher for longer. And therefore markets have reassessed the risk of 2-year, 3-year, 5-year average interest rates into the future. So you're probably thinking, what's that got to do with the Chancellor Rachel Reeves and President Donald Trump? Complete opposites almost. Well, because with Rachel Reeves, the budget she released included about £70 billion of additional spending each year. That is being funded by tax increases and borrowing. The more money the government pushes into the system, the more dangerous it is that that then drives up inflation. Exactly the same concerns with Trump. He's so pro-growth and low taxation that again the concern is that drives up inflation and so on. And ironically, the markets are concerned about both these people interfering in completely opposite ways. Trump by lowering taxes and Labour by increasing taxes. It is going to be fascinating to see which of the two is playing it right. Labour's high taxation economy or Trump's low taxation economy. Which do you think will win out? Comment below. So look, let's conclude with, is property a trap or an opportunity right now? The way to look at this is there is a real underlying problem and there are the plasters being stuck on to try and hide or slow down the development of that problem. The actual problem is there is such a supply and demand disbalance in the property market. It's just ridiculous. It will go up long term, a decade at least, until the supply problem is solved. Government interference and interest rate interference affects your liquidity, ultimately to try and slow down the market growth, which then might make other investments more attractive for capital to reach instead of property. So the question isn't if property investing is a trap or an opportunity. There is so much need for more property, more builders and so on, that it's just impossible prices won't keep climbing to some degree over the long term until the real supply problem is solved. The reality is, as the return on capital employed in property drops due to government interference through changes through stamp duty, taxation and regulation, that will change the profitability in property in this moment, but ultimately not long term. And it's for you to decide if you can get a better return by investing in not just different assets like stocks, bonds, indexes, gold, crypto, but also assess if you can get better returns by investing in different property in different areas of the country, or by doing really more valuable things to the property market, like refurbishing properties, building properties, converting commercial to residential, that ultimately helps grow the supply of property in the market. And actually, it's all those things the government should be incentivizing us and wanting us to do. Anyway, I've covered a lot there. So as always, I love getting your comments below. You'll see I always try and answer all of them, and I'll see you in the next video up here.